Okay, good afternoon, everyone. I propose we get started. We've got a few people that will probably continue to join over the next few minutes, but in the essence of starting on time, we'd like to get going. So good afternoon all. Thank you for joining us today. My name is Lewis Hyde, and as a quick intro, I've got the privilege of heading up business development for Swift UK and Ireland. I've got a responsibility for managing our sort of client relationships and partners across our 1,000+ strong community in the region. And I'm delighted to be able to host you all this afternoon live from the home offices of Kyriba, the payments business, MasterCard, and of course here at Swift. We hope that all are safe and well, and of course we do look forward to the next opportunity for us to run one of these sessions in a face-to-face environment. Today we're going to be talking to you all about the significant changes in the payments landscape and the trends, challenges, opportunities that this potentially brings. As a first port of call, I just want to say thank you to our speakers this afternoon. There's lots of preparation and planning that has gone into this to hopefully make this a very successful and informative session for everyone. And secondly, just a few housekeeping rules and items that we can use to help us take us through this smoothly this afternoon. So firstly, today's session is going to be recorded. We will be making this available for download after the webinar. So if you do sort of miss anything or need to take some notes and need to refer to anything, we'll be sending the recording after. We will be taking questions, but what we would like to do is take the questions at the end. So there will be a few speakers this afternoon, and after each session, what we would ask is that you take your questions down, and at the end of the session, we will have a chance for a more broader Q&A. In order to actually ask questions, what you'll notice for everyone in the bottom right-hand corner of the screen, you should see a Q&A or a chat bot item. So if you click on that little box there, you will be able to pose questions to the speakers throughout this afternoon. So what I'd like to do is quickly take you through the agenda slide. So Elliot, thank you. So the agenda here this afternoon. So I've taken you through housekeeping and very broad or brief introduction. We then have the payments business, Kyriba, MasterCard, and Swift taking you through some presentations. And again, as I say there, we will have a Q&A at the end for everyone to pose their questions. So look, without further ado, what I would like to do is hand over to our first speaker, Elliot Halpern, Director and Co-founder of the payments business. And so Elliot, over to you.
Well, thank you so much, Lewis, and good afternoon, ladies and gentlemen. A real pleasure to be given this opportunity to speak on behalf of my colleagues, the payments business. And a big thank you to Kyriba, given their very sophisticated treasury management solutions, an area that I've come from personally, and also to my fellow colleagues, John Bushby of, I do beg your pardon, James Bushby of MasterCard and Lewis Eve of Swift. So the aim of my presentation today in respect of the payments business is to answer two major questions. We actually started in January this year, although it was, we had spoken about it for a few months prior to that. And our aim is to do, as I say, two things. Where do UK participants, new entrants, get the information required about the numerous issues in the payments landscape? That could be regulatory, it could be solutions, it could be legislative or whatever. And how do I, meaning the UK participant, be it bank, fintech, consultant, how do they individually get their voices heard? So let me initially just give you some background on the payment business founders. And hopefully you can see my four colleagues there. We all come from an international payments, domestic payments, and international corporate banking and business. Mike Chambers, who I'm sure many of you know, was former CEO of Bax and Faster Payments. John Doyle is now our managing director. He was a director of Vocalink and is a very well-known consultant to the industry. Paul Chandler comes from the payment solutions area in an NED type role. And I myself come from an international cash management role, very much corporate banking, currency clearing, concentration, that sort of thing, risk management, but also cross-border payments and domestic payments as well. So I'd like to think that we have a good array of people in our own organization that can provide the intellectual capability to devolve to the industry and help. And I think that's a very important point, ladies and gentlemen. I mean, we are all here to earn a living, of course, and given the current environment, not easy. My colleagues, including myself, we all come from the payments world. We've spent many years in that world, and we've gained a lot of experience. Our aim, from purely an individual perspective, is to give back to the industry. We want to contribute and give back to the industry, given all the years we've spent in the industry. And I think that's very important, that we can contribute and add value to the industry. So just wanted to touch on that, and I hope that's clear. And as I move on to the next slide, which I hope you can all see, is basically, well, what is the problem? What are the issues? Well, let me just tell you some things that we have come across, not just between ourselves in the payments business, but also from our many years in the business and in the industry. Well, why were we formed? What is it we're going to do? We are a membership-driven forum, and we have been established because we believe we have to get much more detailed information out to the recipients, all industry participants, as regards the huge regulatory changes which just continue ad nauseum, new innovations, that is important. There's some tremendous challenges. We can talk about them later, and we'll certainly be hearing about them from my fellow speakers. And there are some good opportunities, but just those things alone have to be explored in real granular form. And this includes innovative products. And what I think is important, it includes services now permitted under the new legislative landscape. I mean, we're familiar with open banking, we're familiar with PSD 1 and 2, and interestingly enough, PSD 1 and 2 was, in a sense, a reply by Brussels to the UK's open banking. Now, given we voted to leave the EU, I think it is important to say that PSD 1 and 2, again, you're all familiar with it, is enshrined in British law. So that is something that we have to adhere to, the industry has to adhere to. Worth mentioning, I think. I would say, of course, and naturally, and no disrespect to many people and companies in the industry, they know their industry, they know their work, and they provide a tremendous value to the industry. But actually researching who they are, from our experience and my own personal experience of speaking to banks and fintechs over the many years I've been in the industry, and understanding each individual's role, whether it be a regulator or an industry association, is difficult. It takes time. And time is money, and it just is quite an effort to navigate that landscape. So the payments business is offering our members, through a membership-driven forum, help in navigating that landscape and where to retrieve the relevant information they want on the industry, be it regulatory, new products, suppliers. We will provide that information. So our ultimate aim is to be a core disseminator of information to the industry through our membership. And the membership forum, I would urge you to sign up, it can include individuals, it can include banks, it can include the challenger banks, fintechs. You know, we are agnostic, if you like, in the members or those entities who want to join us. Our aim is to bring the community together and work with the existing organizations. I think that is important to stress here. We are not looking to disseminate similar payment bodies, industry groupings, and clearly not the regulator. So we will work with the many other associations and consultancies that are there in the business. So the aim is to work with them and allow them a wider audience through a tremendous networking opportunity that we are offering through this forum. So I would simply say that we are there to assist the membership, we want to be a voice for payments, and we want to be a signpost for those members. And if you look at the slide, I've mentioned a few of those things. Some of the bigger entrants that are coming into the market have huge balance sheet power, and they really do. But at the same time, one has to balance that with the tremendous creativity of the fintechs and what they're bringing. The difficulty is, ladies and gentlemen, that payments has become very much, we believe, a homogeneous product. So each ultimate supplier to the end user being a corporate or an individual, a retail market type customer, how can each supplier, bank, payment service provider differentiate their offering above the others, the other competition, in order to meet their revenue goals and increase market share? And all that has to be done within a very tough and convoluted regulatory environment. So ultimately, on that slide, I'm highlighting some of the problems. I think I've mentioned them now. And where does one go to, and who does one go to speak? Well, we'd like to think you come to us, if I may very courteously suggest. Here, this slide just gives you some ideas of the sort of people and areas that we are covering and how we're going to do it. I've mentioned about assisting our stakeholders, our membership. We want to provide solutions. Bridging the gap, ladies and gentlemen, if you think about it, there's a bit of a triumvirate approach in the industry. You have the very strong IT-orientated fintech as a supplier to the bank or the payment service provider who is using their applications to provide payment connectivity, interoperability, and front-end services to the end user. And I say again, the end user can be a corporate, can be an individual. But again, a lot of participants in the industry and a lot of banks, and I've worked with 3 huge international banks, and I say this with no disrespect to the banks or to any other payment service providers. There is a habit that banks don't often speak directly to their customers. And I mean that, as I say, in a very polite way. Banks tend to speak to banks. Well, that's good. But at the end of the day, the end user is either the corporate or the individual. And with the decline in the branch network, particularly on the retail payment side, the ability to provide clear, concise and transparent offerings to the end user is very important. So we want to bring those 3 elements together, if you like, and bridge that gap. And we'll do this through our own industry events. We intend to have some thought leadership forums. There's a major partnership program, which is absolutely key to what we do, and I will outline that later. And there's a tremendous networking opportunity for those participants, and I use the term participants in its widest sense, all those financial institutions, fintechs, and consultancies who are engaging with their customers, with their suppliers, with their intermediaries in the industry. I mean, at the end of the day, it's all about, is it not providing the customer who is king with value and providing the service at an acceptable price that meets the revenue goals, meets the shareholders' aspirations, and provides the institution and the supplier, the participant, with an acceptable bottom line that meets the revenue targets. So that, I think, is really our core area when we talk about being a disseminator of information. This slide, how do we solve the problem, talks more about the services we offer. And I will go into this in further detail later in the slide, but For example, the payment community, we're actually now calling this our membership forum. This is about participants joining, using our platform, if you like, for their own needs. In other words, a sort of white labeling of our platform under our umbrella organization for a bank or a fintech's own particular needs. It could be your own events, could be your own emails and contacts. It's your choice. You can use the platform for your own group and promote your own group's interests. So that, I think, is very important. Our payments directory is really, I would say, the intellectual property database of what we're offering. That is populated by each individual member when they join, and there we will be putting into our database activity and information on who the entity is, what they do, what their market is, obviously based on GDPR adherence to that, and the detail that the actual entity wishes to put into the database, if you like, and that's very important. And then I mentioned advisory, which is really us getting the information out through webinars, newsletters, blogs, events and seminars, thought leadership forums, so I'm getting a bit tongue twisted here, I beg your pardon, and industry updates. So that's just a very brief overview. Now, this slide, I believe, is extremely important, and I'd like to just spend a little bit of time in the time that I'm allowed to talk about this particular slide. I mean, first of all, there are a tremendous amount of industry developments happening. So on the right-hand side, I've listed the current industry developments. I don't intend to go through each one, don't have the time, and you'll all be well familiar with them. But I think what I'm saying here is some of these new initiatives have actually produced unintended consequences for the industry. I mean, if you take PSD2, which was the result of PSD1, it's all about the data. And data, as we know from recent discussions in the news with Cambridge Analytica, it's all about data. Well, the data belongs to the customer, GDPR accepted. And that is very important. But institutions hold that data as well, part of their ability to make payments. So the FCA and the payments business and all of us on this call must recognize that our key aims are to adhere to GDPR and protect the customer. And the payments business is very keen to do that, protecting the customer. Customer is king, a rather hackneyed sentence, but it's absolutely true. The market turmoil is there for everyone to see. Certain delays in, for example, request to pay, but these things are going to happen, and we are there to cover those as key issues. And it's not just the retail side, is it? It is also the corporate side. Of course, the industry and the news you hear, and with the tremendous IT infrastructure and input and technology in the industry, it impinges on the retail side. I mean, that's what happens. There are probably 20-odd million plus individuals that have a bank account. But that does not disintermediate intentionally the corporate side. And I come from a corporate banking background, and that's particularly important. I mentioned MiFID there. For those of you who are familiar, that's Markets in Financial Instruments and Derivatives. And that was a legislative framework that was instituted by the EU to regulate the financial markets and improve protection for investors. MiFID is the term. It is law and under the European Union, and it is law in the UK, and it's there for regulating all investment services in member states. I mention it because there's a good example of where one of the initiatives has completely ensconced itself within the corporate side. So we shouldn't forget the corporate side. And given that the payments business is looking forward to working with Kyriba on their treasury management and corporate cash management side, again, something that I'm well familiar with, I'm delighted that some of the services that they are offering are absolutely key to meeting those corporate requirements, be it in the treasury management, multi-currency pooling, or netting world. These are absolutely key to the treasurer, and well done for Kyriba for providing those sophisticated services. So as we look at the retail and international corporate banking, again, many different things are happening and many different solutions are there. Again, the ultimate provider will have to provide, both in the corporate and retail space, a real market differentiation for what they are doing. So market intelligence and identifying their markets is absolutely key. And again, that is something that the payments business will be delighted to assist the community on. The other areas, of course, I mentioned, but just to recap very briefly, are the new payments architecture, the request to pay, and so on and so forth. You know, these are all key elements that are happening now in the industry. And I said earlier, there have been some delays, but I think it's very important. You know, if you take, for example, request to pay, it is a game changer. And the fact is, this is the result of FCA focus. Very important. The aim is to, if you like, get away from fraud in a lot of these things. Very crucial. Business resilience, very, very crucial. Fraud, again, in the confirmation of payee, reaction to the huge amount of fraud in the business. So these are all important initiatives that need to be addressed. And if they're not going to be addressed today, they will certainly be addressed tomorrow. I think the industry, as it gets more convoluted, it's all about the operational risk. And the coronavirus hasn't helped. You can, and I would really emphasize this, ladies and gentlemen, you can outsource the activity, if you like, of your operations and your risk management, but you cannot outsource your responsibility and liability. And I think that's very important in this discussion. Allow me to move on, if I may. This is our structure, and a lot of these points I have already covered, but just to say, we have our membership forum, we have our community hub, or what we call our membership forum, and there's our directory, our key kernel of information on all the participants and members who have joined us, and we have a partnership program, and that consists of sponsor, patron, and a corporate and FI. And different programs provide a raft of different services. So just to be clear, what do we mean by a corporate and an FI partner? In our view, this is an organization that has a range of innovative payment products and services. They would offer our membership in the industry real unique solutions to manage their strategic and commercial aims. If I then talk about a patron gets a whole raft of different services from ourselves, such as access to the membership and the ability to contribute to our various events. And we look at a patron as a well-known industry individual or an entity where that entity has a unique selling proposition. It could be a specific industry approach, it could be a particular methodology, or probably more likely to be a particular service that is an initiative, is considered a game changer, or even a rainmaker, which is how I describe our friends at Kyriba and what they're offering. And ultimately, we have sponsors, and a sponsor gets a lot of sophisticated services, and I'd be delighted to talk about all these services offline in much greater detail. We don't have time now, but a sponsor is an enterprise, in our view, that really does influence the direction of our own business. They are a key partner and a valued contributor to all aspects of the payments business, but also from a strategic and commercial perspective of the overall industry. And ultimately, there's advisory services, which I think I spoke about, which is getting the message out, our webinars, our newsletters, our blogs. But you'll see directory in there. And again, I just mention it, emphasize the ability for us to provide a central core kernel of information to all the community. It is our intellectual property value in respect of a database, extremely important and extremely worthwhile. And I would ask you to consider that, ladies and gentlemen. You know, at the end of the day, really what we want to do is two things. We want to be a partnership with everyone. We want you to join, and we want to provide debate. I say again, we want to give back to the industry. We want to educate and inform and point the way. We want to actually make life easier for particular individuals and entities. It's quite incredible from some of the businesses I've spoken to. A lot of the businesses are seeking to solve an ever-increasing range of problems, but they have to put up with tight deadlines and limited budgets. Customers, corporates, individuals, customers who are king want a speedy, low-cost and transparent manner in which to operate. So we believe that this membership form will provide a robust and practical approach to doing that. We want to add value to you as participants. We want to partner with the Kyribas and the other consultancies and fintechs of the industry to provide better working practices, which should, we hope, reduce time in respect of expenses and the processing spent on initiating end-to-end payments. So it's really about partnering, providing new offerings, and helping the participants get that information and use that information and grow their own revenues. So that's really probably as much as I want to say today. I just want to again thank Kyriba and thank my colleagues from MasterCard and SWIFT. And I would be happy to answer any questions at the end of the presentation, but you have my email there, so by all means do contact me that way. And I wish you a good industry time. Join our organization. Join the train. It's leaving the station. Doesn't matter what speed, the slow train, the fast train. We will do what you want you yourselves to do. Main thing is stay healthy and happy and safe in this rather crazy environment. But whatever the environment is, the payments business and the industry will continue, and we're happy to assist you and all the participants in whichever way we can. I thank you for your time, ladies and gentlemen. I do hope that's clear. Delighted to answer questions at the end or offline, given you have my details. And I would just finally quote the last quote, if you like, on my slide. Yes, join the debate, join the community. Ladies and gentlemen, we are surrounded by a raft of bad news, good news, and everything in between. The main thing is be positive. A positive thinker sees the invisible, they feel the intangible, and they achieve the impossible. Well, the payments business with the Kyribas of this world and with UK payment participants, irrespective of their size and irrespective of their background, will do just that through our partnership approach and our membership forum. Thank you for your time. Greatly appreciated.
Brilliant. Thank you very much, Elliot. We really appreciate that. And Paul, over to you.
Okay, thank you very much. Elliot, that was most enlightening. Thank you for your time. Very good afternoon to everybody. My name's Paul Simpson. I'm the Kyriba Payments Director, and I've been involved in payments for over 30 years. I'm going to go through some of the challenges that are being faced today. In the essence of time, I'm not going to go through each individual point, and also my colleagues from SWIFT and MasterCard will also be picking up some of these points as well. I think it's important, very important, that we understand and realise that there are things going on in the industry outside of COVID. You know, people are migrating from their ERP system to cloud. There are things such as new payments architecture that's being reviewed. There's compliance regulatory that's going on. The SWIFT GPI and how that's incorporated, for example, into the Kyriba platform. And very much in everyone's mind is business continuity process and planning. But two things which stick out to my mind at this moment, and as people move more and more to faster payments, you know, for improved liquidity in terms of the way the world is at the moment, is that bringing forward an increasing faster fraud as well? So there's some very interesting questions and debates to be had around some of these challenges. But as I mentioned, there are two key things we need to look at more closely today. Yes, of course, we're going to discuss the virus, and we are going to be discussing business continuity planning and process. And what I would like to do is set the scene for those of you who might not be aware of who Kyriba are. So Kyriba are part of the global payment ecosystem. We work with UK and global partners, for example, Pay.UK, we work with SWIFT and SEPA, etc. And you may not know this, but we're quite proud that we were one of several companies that were approached on behalf of the UK government to ask if we could create a solution re COVID-19 disbursement payments. That is to make sure the payments were getting through to the right beneficiary, if you like, a form of confirmation of payee. So this is something that we've been in dialogue with, and hopefully this will result in someone in the industry, maybe ourselves, coming together maybe with other partners to produce and offer this solution to the government. We take the whole COVID situation very, very strongly, and that means that we actually have a dedicated resource centre as well. For those of you who don't know who we are, I'm just going to quickly move on to the next slide and show you details on Kyriba itself. So our experience in the global marketplace. And again, for those of you who know us, this is all familiar territory. If you don't, then we have nearly 100,000 individual users of our solution. That's based across 2,000 plus clients, all on one single platform. And that single platform is really important because it is one platform with multi-tenants. We're not providing private or multi-versions of our platform. That means it's much easier in times of crisis, for example, to support and do upgrades and updates to. In terms of our size, we have the turnover of just over £100 million, and that's increasing every year, so we're going in the right direction. Outside of the banks, a fact we're very pleased to shout about, is outside of the banks, we actually process nearly 20% of all the SWIFT global traffic. And we do that through working with international and domestic payments. So aside from SWIFT, you know, we are also a BACS provider, and we also offer SEPA, ACH, etc. So we've got a tremendous payment background there for international and domestic. Move on to the next slide and just go through final couple of slides just to set the scene to who and what Kyriba do. Kyriba are a platform which many of you know, which is treasury management. What we find prospects and customers are not too familiar with is that outside of treasury management, which is what we're widely known for, we actually have quite a few other modules, including working capital, risk management, and payments. Payments today, of course, is the focus of this webinar. And what we've done is by combining all these solutions that we have which are all integrated, they're all on one platform, they're all our own solution as core products here. What we've done is taken those and we offer what we call the most integrated financial solution available in the marketplace, because we're able to work with partners, APIs, banks, non-banks. We've factored in things such as machine learning. So by bringing all these together, we believe we are the most integrated financial technology provider there is. So what's going on then in terms of the virus and the impact, and what's that doing in terms of customers that are moving to us alongside their ERP migration? Well, actually, it's actually seen as a driver, the situation of what's going on in the world at the moment, because 90% of all the ERP users will have to migrate to their SAP and their Oracle system to the cloud this decade. Indications are 70% will be doing that in the next 5 years. And that's obviously really thrown up some issues, because they now have other things to contend with. But the fact is they're moving to the cloud, and one of the reasons they're doing that is because it will help them with their disaster recovery, with their contingency planning, and with their business continuity as well. And I want to explain how we can help with that. So I'm just going to bring a couple of slides up to say that if you are moving your ERP system and migrating to the cloud, then typically, these are just a couple of the issues we find, there's months of development connecting the banks with correct formats, the migration of payments, and if anyone's done this with an ERP, they'll know exactly what I'm talking about, can be very, very complex, costly, and it takes, or seems to take, forever to do this. Then you've got the cost to connect to a new bank, which, believe it or not, in terms of time and expense, ranges from £150,000 to £300,000 per bank. And then there are new payment requirements that you also have to factor in and take account of. And some of these, for example, APIs and XML, they're not actually managed. Some of these new payment requirements are not managed by these systems to begin with. One of the things I think it's worth noting about is that while still maintaining all this and migrating through your ERP system to cloud-based, is you've still got to make sure you've got fraud prevention in place on top of pandemic issues as well. So there's a colossal amount that's going on in the background if you're moving your ERP system to cloud-based. What we did is we worked with our customers and prospects to see how Kyriba and our platform could help some of those challenges in terms of cost and expense and time. And what we found is customers that used our technology, used the Kyriba platform, alongside their ERP solution, were able to accelerate their ERP migration by several months, or indeed in some cases even years, in terms of speeding that migration process up. They also found, because we've got built-in a payment hub, payment formats, bank formats, it's all in our solution as predefined formats. We don't build them for each customer, they're all in there. What we found is we were able to reduce the payment and development of bank format costs by up to 80% in some cases. And that reduces and removes the need for IT support. Typically, IT would have been, and some cases still are involved in bank formats, which is not key or core to them, and we've got those bank formats already in the Kyriba platform. So we're able to improve responsiveness to support the business, and we believe because of our payment hub, we're able to actually make a smarter way to connect to the banks. While all this is going on, you've got to make sure as well, and build this in, that you are preventing payment fraud. So you must make sure that you standardize payment controls, you have full 100% global payment visibility, and that you adhere to your payment policy compliance that you have within a corporate to adhere to those compliance rules. And detect any suspicious payments, and that can be done in a variety of ways, and highlight those to the necessary people in the corporate company, even including silence alarms. A silent alarm is where a trigger can be set off so that whoever the fraudulent person is, they're not even aware that they've already been flagged and that someone's looking at their activity in their system. All this, of course, is increased with the threat of the virus as well. So things are very, very much busier than they were before in terms of trying to combat fraud. What I'd like to do, as we just touched on fraud, is give you some examples, and I'm sure you've all got your own examples in terms of even from your own personal email attacks And I've even had them come through, and I'm sure some of you have as well, even had them come through on my phone saying, oh, can you pay the funds for this across to this new bank code and sort code? Or please, can you click on this link for updated bank details? And that's just on a personal level. But these are examples that we've come across in the industry of scams that are happening to corporates. Due to the coronavirus, we are changing banks. Please send payment directly to our factory or supplier instead. Please let me know when the total amount is ready to be made of payment so I can forward you our updated payment details. The moment you click on that, you've got a dialogue going. It's extremely hard to break that dialogue, and you are then entrapped with that fraudster as well. Those examples, what do they actually mean in real terms? What percentage? What's the impact? This is going to shock you. It shocked me when I went through these stats. In January, there were 137 coronavirus-related email attacks, so just over 100. This research, by the way, is from Tech Republic. Then the coronavirus really started to take off, and what we see is it grew to over 1,000 email attacks in February. This, then in March, was nearly 10,000 attacks. So far, current trends indicate it will be tens of thousands of email attacks in April. And May, well, it's anyone's guess. This is only going to go upwards in terms of attacks. And an interesting fact here, again, is that the IT personnel report actually said that their email schemes and attacks had jumped by nearly 700% just from February to March alone. So I'm sure you all are aware of these these attacks, either personally or on your corporate business, but they are growing and they will continue to grow. That is for sure. So what you have to look at is, how do you keep corporate payments safe when masses are working from home? And this is the issue we have, because what's happened is, with the outbreak of lockdown forcing organisations to adopt a work-from-home policy, what was typically, for corporates, a very, very tightly coupled process for payments and sign-off of payments has now become decoupled. Highly integrated business processes for payments have become disintegrated. And if it's disintegrated, then that yields cracks in processes and workflows. There's no more wet signatures, as I call it, because that process isn't possible under today's current situation. So how can you or we secure disintegrated processes and prevent payments fraud? And we'll have a look at that in just a few moments. In the essence of time, what I'd like to do is suggest, I've just got a few more slides to go through. If there are any questions when we come to the end of my presentation, you've got my contact details at the end. Please feel free to email me, or of course you can ask questions and answers through the webinar platform at the end of the session. Just wanted to finish with a couple more slides, continuing the theme about corporate payments and how you can make sure that they're safe when you're working from home. Some interesting details here. Transitioning to a remote framework, working from home, represents a major adjustment. However, for fraudsters, this actually represents a major opportunity. It yields cracks in the process. Solutions must protect corporates against fraud. And what I think is really interesting is it's not just external fraud. What's happening is people know the system, they know the process, they know the workflow. And now people are working from home. What they're seeing is the opportunity, now that process is not so secure, or the workflow isn't carried out as it would have been before. What they're finding is the ability to actually go in and change and work outside the processes which are no longer in place. And what we're finding is there are other types of advanced fraud attacks. What I would strongly suggest, and we'll see some stats in just a moment, is there are an amazing amount of corporates who still use just an ID and password to either log in their system, approve or release payments. What you've got to do, and this is a hard lesson the way the world is at the moment, is to look at long-term contingency, full payment protection, data encryption, multi-factor authentication, full workflow approval, full visibility of all payments that are going to be released and have been released globally, have dual controls, and it's ideal if you start to look at having machine learning. And all this needs to be going on in real time. This is a survey. We had results from the AFP. This is last year, admittedly, but this really amazed me. When it was asked to corporates what would make your global payments more safe, as you can see, these are the top 4 points: real-time payment screening and fraud detection. And then when we move down and we ask customers, or prospects I should say, what have they implemented today, only 70% have dual control. In terms of multi-factor authentication, less than 50% of corporates actually have that in place. And look at this, it's shocking almost that in terms of machine learning, only 3% of the corporates we spoke to had actually put that in place. These are all things that you have to have, not just one, but all of these different processes should be built into your system. So what I'd like to do as we're talking about systems is just on the last few slides now go through typical disaster recovery as it goes hand in hand with fraud and what's going on in the industry and workflow and signing off of payments. So what typically happened, and I hope you will all agree with me, no one could have foreseen the situation we're in, where we're in lockdown, working from home for weeks, maybe even months. So typically, a disaster recovery or business continuity plan was set up for a relatively short time. What no one could have foreseen, as I mentioned, is that this is here to stay, and it's long term. It's weeks, if not months now, that you need to build your business continuity plans around. And an example is, the several organisations we spoke to said that if their business continuity plans were actioned, that would include using bank portals to make payments if they were not able to be in the office and they were working from home. To use bank portals, let me just make you aware of what this would mean. The centralisation payment policy and fraud detection in a corporate would become almost impossible if you're going to lose that capability and start making payments through bank portals and use the security of your central platform such as Kyriba that controls all these payments and workflows. So inconsistent payment controls will increase the risk of fraud. We've already identified that internally and externally, fraudsters are looking at this and the gaps in the process of making and sending payments. Just move on to the next screen. So what we have to do and what we're trying to say to the industry, and you'll hear this when we speak to SWIFT and MasterCard, they'll touch on a little bit about true business continuity as well, is now more than ever is the time to look how you can enhance your business continuity. The situation we're in today is here. As I've mentioned, it's not just going to be disappearing in a few weeks. This could be months. And who's to say it doesn't come back or a time of crisis comes back in a different form in another year or 2 years? No one knows. Also, at the same time, you could look to reduce your costs, improve your controls, tighten and tighter your real-time fraud protection, increase bank independence, at the same time improve your treasury, ERP payments and connectivity. And, as it says quite boldly down here, avoid compromise in payment processes at any cost. What I would like to do on this last slide is just quickly highlight how and why and what Kyriba have been able to do for some of our prospects and also for our customers, and why we have prospects who are actually wanting to use our technology now more than ever. So they actually see a desperate need that they want to improve their liquidity, their visibility, their fraud protection, and what they're doing is they're coming to us because we're 100% cloud-based, and what we're able to do is to say to them, we can offer you a treasury management solution and payment hub or just the payment hub, and that will provide you with true business continuity. And how that's done is because it is unique infrastructure, we can offer an SLA and business continuity process and planning. I've mentioned this quite a few times, just want to emphasize again, this is one platform. So it's not a single per customer or private or with multiple. This is one platform for many, many different customers. There is only one platform for us to support, to update and support people throughout the globe. And why that's important is it because it contains real-time fraud prevention. It's got a mobile app option. But why it's really important is that because we are a true global company with one platform, depending upon which region is touched differently during a crisis, then we can literally flip the support to a different country without disruption. So we believe we can provide a solution that's robust. It will handle true business continuity. It provides payments, treasury management, fraud prevention. It does everything you could need at this critical time that we're all seeing in the world at the moment. And that's why we have got people inquiring and people still talking to us even more, as I mentioned, about can we help them improve their liquidity and their payment process and reduce fraudulent activity. What I would like to do now, my email address is on there. I'm going to hand back to Lewis, and I'd just like to say thanks very much for listening to my presentation. I hope it made sense. I have rushed through that to try and speed up so we're back to the timekeeping. But if there are any questions, please feel free to ask at the end of the webinar, or you have my email address there if you'd like to contact me privately. Thank you very much.
Brilliant. Thanks, Paul. Yeah, and I think we're doing okay for time. We might have to move back the questions slightly, but I think we are good for time. So next up, we'd like to hand over to James Bushby at MasterCard.
That's right. Thanks, Lewis, and thanks, Lewis. Thank you, Paul. And first, I just want to say thank you to Kyriba and Swift for inviting me to speak today, which appreciated, and also to thank everyone on the call for taking the time to actually attend. So, as mentioned, my name is James Bushby. I actually work for Vocalink, who are part of the MasterCard family, and I've got sales responsibility for Vocalink in the UK. For those who don't know who Vocalink are, so Vocalink is the critical service provider of central infrastructure services for the core payment systems in the UK. So when I talk about core payment systems, what I'm referring to is Pay.UK. So obviously that would include faster payments, BACS, check and credit clearing. And then it also includes the Link scheme as well. So to put that into perspective, Vocalink processes over 90% of salaries in the UK, more than 70% of household bills, almost all state benefits, as well as powering Link's circa 60,000 ATMs. And then, of course, through faster payments, we enable consumers, businesses to have access to immediate payments 24 hours a day, 365 days a year. So hopefully that's helpful background to understand more about Vocalink and hopefully some of the relevance of the areas I'm going to touch upon. So there's three key things I'm going to cover. The first one I'm going to talk about is open banking and the role that we're playing in that ecosystem. Second point I'm going to cover is what are we doing to help fight against financial crime, very, very topical at this current moment. And then finally, I'm just going to talk about a new service called Request to Pay. So, apologies, I'm just trying to move the slide. So, this first slide, what this very simply demonstrates is that open banking is a global trend. I'm sure that this is probably already out of date and there are other markets moving towards open banking. So it just shows how fluid and relevant this is. It also shows that there's two key drivers typically for open banking. So some markets are driven by regulators and some are actually driven by industry demand and what's happening in that country. It's fair to say, and it's already been touched upon quite a lot by Elliot around the complex regulatory environment we're in. The UK has certainly been driven from a regulatory perspective. And as you can see, it's not just the UK, so the whole of Europe was driven from a regulatory perspective for open banking. And again, Elliot touched on this, we had Payment Services Directive 2 or PSD2, which I'm sure you're all familiar with, and it had three key pillars. So first one was enhancing security through stronger customer authentication. Second one was enhancing customer rights. And the third one, which is what I plan to talk about, is the enabling of third parties to be able to access account information so that organizations can drive new payment and account services, which obviously is open banking. And the key outcome that they're looking for is to drive innovation and competition into the market. In Europe, the timing around going live for that was to have the banks have API gateways available for third parties by 14th of September last year. UK liking to be a little bit different, actually driven by the CMA. They were pushed to go live earlier, and they pushed the 9 biggest banks in the UK, who are also known as the CMA 9, to go live in January last year, which you can see from the diagram. I'm not going to walk through all the information on the slide, but as you can see, on January 2018, the actual open banking ecosystem went live in the UK. give you an overview of where we're up to. So since then, there's over 200 TPPs live, roughly. Many more in the pipeline as well, waiting to be registered. We've generated almost 350 million API calls since going live. But to put it into perspective, circa 98% of those calls are what we call account information requests that are performed by what are known as the AISPs, or account information service providers. And then obviously the remaining are actual payment services, organizations delivering payment initiation services. So as you can see, still the strong use cases relate to account information requests, and probably where a lot of that is happening is to organizations that are providing personal financial management, so financial advice and budgeting, and accessing accounts data so that they can provide enhanced services to their customer bases. There is traction starting with for payment initiation services, and where we're seeing probably some of the strong use cases is where it's kind of being called pay yourself. So example would be using your current account to pay off a credit card, or potentially transferring money between each account. But I think it's probably an accepted point that the real scale in open banking will really come when people are leveraging the real-time payment infrastructure, faster payments, for online merchant payments taken directly out. But the step for making that a reality, the infrastructure itself has to be resilient and secure. And I think probably the most important thing is the use case has to be very strong, and the end user experience needs to be frictionless. So it can't be worse than the current experience they're having. If I then move on to what MasterCard are doing to help enable this ecosystem and try and address some of the pain points that you see. If I start on the left-hand side, so number one, Open Banking Connect. So this is a central hub that provides third parties with a single universal connection to the FIs. Massive benefit to those third parties is it means they're not having to connect to all those slightly different different API formats. So it saves them on complexity, cost of integrating with all of those gateways. And it also means the service provider can really focus on what they want to do, which is developing innovative and impactful value propositions. If I then move across to the right-hand side, under Open Banking Protect, obviously a really important thing is successful management of security and fraud, which underpins everybody's confidence in using the open banking. So not just the end user, but everyone who's involved. So that's obviously really critical. So things such as making sure for the FIs that the TPP is registered and a valid member of the ecosystem, through to management of fraud. And fraud management will become increasingly important as payment initiation services really do take off and start to scale. So that would be really critical. So what we have is that product there, which is Open Banking Protect. So real-time verification of third-party registration and certification status. And then we'll combine and overlay that with fraud and monitoring services and alerts as well. The other main part as well, which we're working on, is spoken about it a lot already, but giving the end users having confidence in the service is critical. And if you're going to use open banking as a way of making an online payment, the expectation will be that they'll have the same protection to resolve any disputes, as you would get with a card, such as goods don't arrive on time or not as described. And currently that isn't there today. So one of the things we're doing is to offer what is called Resolve, which is a centralized inquiry and dispute resolution service. And of course, being MasterCard, we've got significant experience in how to manage that dispute mechanism from a card perspective, and we're bringing all of that knowledge and experience in to deliver these other services. If I then look across the bottom, I'll fly across these. So we've got some other future services as well. So API distribution platform, there's a number of APIs, non-regulated APIs that at the moment aren't being exposed by the banks. So the idea of this platform is to help the banks and third parties with a strategy around those APIs and hopefully help them find different ways to monetize the data. Then got consent management. So understanding who was given permission, when, and is it still valid is really important. And again, we will have a service that helps with that. And then the final one, again, I'm sounding a little bit like a broken record, but one of the key things for open banking is end user, it working for the end user being confident in the service, and for the actual experience to be frictionless. And again, through our card experience through MasterCard, we'll be taking that and looking at authentication solutions. So the next part I'm going to cover is just a little bit on fighting financial crime, which of course Paul spoke about in his presentation as well, and what we're looking to do in that side of things. So I'm not going to walk through the information on the slide. You can see it. Quite scary numbers, but probably not too surprising to a number of people on the call. This slide actually comes from a report from UK Finance in March, and it shows what a significant impact fraud is having in the UK. And as Paul said, because of COVID, unfortunately, fraud is on the increase with people trying to take advantage of the situation, especially the vulnerable people around trying to trick them into buying things that aren't going to arrive or falsely paying for medical or food supplies. So it really is critical that the management of financial crime within the UK is effective. So, and because of the role that I outlined before around our role within the payments industry, we think we're very well placed to help with a lot of that fight. And what I'm going to go through in the next slide is the kind of things and areas and solutions that we have. So, as you can see, we have the infogram on the right-hand side that's kind of got 4 key areas of the services we provide. And then in the middle, we've got our platform, which everything is built on, which is based on a kind of a modern cloud-native technology stack. And what that actually means in simple terms is that we now can do real-time ingest and output of data, which is really driving our ability to help prevent crime versus actually just react to it. The first part of the solution I'll talk about, I'll actually start on Trace. So in Trace in the UK, we actually have something called Trace Mules Insights service, which is live through Faster Payments, where 12 of the biggest banks submit suspected fraud that has happened across Faster Payments. And typically, before the service was live, when that first fraudulent transaction had happened, because of the speed of Faster Payments with real-time payments, it's almost impossible to then trace where else it goes to. Because we now have that network view of having those 12 banks all together creating permissions through Faster Payments, we can actually trace where that money goes to and the endpoints. We can identify potential mule accounts, and then we can alert all the participants within this service, and then they can take the appropriate action. So again, safety, trace, and alert, obviously a fantastic and a world-first solution providing that. If I then go back up to Prevent, again, because of the platform, we're now looking at Prevent services. One of them, which I think is hopefully very relevant to people on this call, is something we have, Prevent Business Fraud. So where this is helping businesses stop things like invoice redirection fraud and CEO fraud. And we've actually got this service live with NatWest. So they submit suspected fraud, and actually through having this service live, they've now stopped almost £14 million worth of fraud occurring. We're going live. I can't unfortunately say the names, but we are also going live. We've gone live with another large FI retail bank in the UK and are implementing with another one as well. So again, a very, very important service going live to help the financial crime banks and obviously for the corporates as well. The other thing we're looking to do is leverage all the experience and information we're getting from the Trace Mules Insights and provide a service which is helping prevent automated push payments or APP scams. And again, under the current circumstances, this is becoming an even more relevant and hotter topic within the industry. And then the final one under Prevent I'll mention would be, I said up front that we support the infrastructure for Pay.UK, which means we're providing infrastructure for check imaging in the UK. So we have also a service that we're offering, and we've done successful proof of concepts to help prevent check fraud as well. So the final part of this I'll talk about is Verify. So Elliot mentioned this as one of the key developments, which under confirmation of payee. So this is, in simple terms, verifying that an account number and sort code matches the account name. And we're in the process of actually implementing a service to support that on behalf of a number of the FIs in the UK. And actually, you may have seen on LinkedIn, but TSB is one of the first to go live, or will be one of the first to go live with our service for that. Currently, this is only for Faster Payments, but there is a roadmap for this to become relevant for BACS. And of course, then that will have even more enhanced meaning to corporates and help from the financial crime from that perspective as well. And then we also have two other areas called Verify Income and Verify Rental. So because of the visibility we have across the payments data, this means that we can leverage information that isn't typically used, i.e. income of an individual, or if they've consistently made rental payments, and help organisations make more informed KYC decisions. So again, it's leveraging our experience and place in the market. And then the final one, as you can see, you've got reporting consultancy services as a wrap around all of that, where we can help support people with their strategy, again, because of the visibility we have. And then finally, what I'm going to touch upon is a new service called Request to Pay that, again, Elliot mentioned and Paul also mentioned as well in their presentations. So this is Request to Pay is one of the areas of industry developments, and in simple terms, it is one of the overlay services specified by Pay.uk, and it's a secure messaging service that actually sits above the existing payment infrastructure. So it's not a payment tool, but it is a way of communicating between billers and end users on payments. So the main drive and the key benefit to the end user of taking this service is it gives them more flexibility on how they can pay, which I will cover more in the next slide. It also, and because it gives them that flexibility, it helps them with budgeting of their funds. So again, in the current circumstances, the management of funds for vulnerable people, or in fact anybody who's looking at direct debits and wondering, budgeting wise, is this something I can still continue to do? This is a very key service and is why it's got increased interest across the industry. And then for billers and for corporates, key benefit for them is increased transparency of the payer's plans. So because they can have more increased, if somebody's thinking of cancelling a direct debit or having problems to pay, then having this communication channel could potentially help arrears. It'll help enhance reconciliation because you'll have more advanced data around what's the actual end user and what they're doing. And it also ultimately helps their relationship with the end user and will help make it a stickier relationship. This next slide is going to just a very high level overview of the end-to-end message flow for Request to Pay. So if I start at number one, a biller will generate, they have a biller app and they will generate a biller request that is sent through what is the Request to Pay service, or also known as the repository, through to the payer app. The payer app could be the banking app, so this could be integrated into your existing online, your mobile app, and have this as an opportunity to make a payment through there. Or there are third parties that will probably sit in front and have this as a additional service to them as part of their account aggregating services. As it gets into the payer app, the payer will have a number of options that they can do. As I said, there is flexibility in the service. They can either pay all or pay partial. If they pay all or pay partial, that will again just go across whatever rails they want to choose. That could be card, could be faster payments. Or if they want to engage with the biller and not make a payment, maybe request an extension or even decline, they then can use the Request to Pay service to start that dialogue with the biller. Even when they're making a payment, that payment information is filtered through the repository back to the biller as well, so they have full visibility of what's happening. And then any ongoing dialogue will be managed through the repository. When we talk about what are the key areas of what MasterCard are going to be involved in and what's our role in this, so as you can see in point one, there's a biller app, which is a key part of the Request to Pay ecosystem. Point two, you've got the repository, so that is a key area of it. And then the third part of the solution is the payer app. So if I take each in turn, the biller application obviously is the thing that actually will give that information into the repository. The repository will securely hold that message and actually store that data, and then also match the biller request with a relevant payer, and then send that information out to the payer app. From the point of view of the role that MasterCard are looking to play, the key role for us is in that repository, so in that single part where the Request to Pay service at number two. We're very well what we are well known for, and what we believe is one of our key strengths, is the fact that we connect third parties securely through a resilient and scalable infrastructure. So that is our core strength. That is the core role that we're looking to play. We also have the ability to provide what is number one, which is the biller app as a white label if needed. We're not looking to be involved in the payer app because, as already said, there's other parties out there that we believe are better placed to be able to support that. It's worth also saying on this webinar, we have Request to Pay Limited, who one of our first partners for delivering this service out to the corporates. As already said, we will have questions hopefully at the end of this, and both myself and the members from Request to Pay would be very happy to answer your questions on that, as I would on any of the other items or topics I've covered. So that's all I was looking to talk about. Flown through that, as I'm conscious of time, I'm now going to hand over to Lewis Ide from Swift, and he's going to talk about the evolution in international payments and messaging standards.
Brilliant. Thanks, James. Great. So thank you, everyone. So look, in the interest of time, so we'll try and fly through these this next piece fairly quickly so that we can get to some Q&A at the end. So look, for those that don't know who are Swift, so I'm just going to take you through a very, very sort of quick whistle-stop tour of who Swift is, where we've come from, so that we can then focus a little bit more on the sort of more interesting subject maybe of international payments and what we're seeing across that marketplace. So for those of you that don't know, Swift was established over 5 decades ago now to find effectively a better way for the global financial community to move value. And I really think that we're built on 3 core principles around security, reliability, and resiliency. And I think that last point is ever important given the sort of current economic climate that we find ourselves in. So we provide a trusted, standardized, and secure network in order to move value across the globe. So, whether that's payments, trade, capital markets, reporting, or potentially specific assets that institutions wish to move. So we support with that. And we have over 11,500 institutions now connected to Swift. And that's everything from, or everyone, from banks to broker-dealers, corporates, fintechs, and many other types of institutions. And quite interestingly now, we have over 2,000 corporate groups on Swift, which equates to something like 100,000 plus corporate entities. And on average, we're seeing about 35 million messages a day sent over the network. Now, in the concept of corporates and corporations, so why Swift for corporates? So, we know increasingly the global nature of business means that companies of all sizes often deal with multiple banking partners, and typically they're spread across the globe. This implies really integrating with a variety of bank communication interfaces and channels. And I know if you refer to one of Paul's earlier slides, the cost of integrating with banks directly, it is expensive. As a result, this leaves corporate treasurers many operational burdens. It's difficult to gain accurate views on things like liquidity and liability across different portfolios. And we know that corporate treasurers are really looking for that central visibility of cash positions, decreases, if you like, in operational risk and costs, increases in automation levels, and integration possibilities where possible. And effectively, one such way that corporates will utilize or connect to Swift, there are multiple ways that they can do it, but one way is through TMS providers. We believe in the strength of partnerships and specifically with the likes of Kyriba. So we've been working with Kyriba now for many, many years and working hand in glove for many years now to make multi-bank connectivity more efficient and more cost effective. So that without further ado, what I'd like to do is hand over to Ben to take us through the next part of the presentation. So Ben leads on our sort of payment strategy and is one of our payment specialists in the UK and Ireland. So Ben, would you like to take us through what you're seeing through the sort of the payments and standards space?
Certainly. Thank you, Lewis, and thank you to the other esteemed speakers speaking prior to us this afternoon, and thank you again to the audience for sticking with it. A few more things to go through, and we're going to look just right now at the changing landscape for kind of payments in the corporate space. At Swift, of course, you'll have been made already very, very familiar with a number of the initiatives that we've run. And how we run these initiatives typically is we go out into the community to find out the challenges before we look at building a system or a program to kind of help with that. So when we first started looking at GPI, our Global Payments Innovation Initiative, there was 4 key challenges within cross-border payments that became extremely obvious to us through our community consultation. And it's the same for the FIs as it is for the corporates. The first one is speed. Of course, you'll be familiar with the time it takes for cross-border payments to reach the account of the end beneficiary. The second was transparency. Now, how many of us really know prior to sending a payment how much fees are going to be charged by the intermediaries, what the FX rates are going to be, and all of those kind of elements of a payment. Very difficult to see what's been charged or what's going to be charged. Traceability, where is a payment at any given time? We can track a parcel, but why can't we track a cross-border payment for millions of dollars? And then information integrity, explicitly key to corporates. The fact that, yeah, it was possible or is possible for invoice numbers to be changed in an MT103 or in a cross-border payment, meaning that when you get the payment on the other side or your receiver receives it, they might not necessarily be able to reconcile. So these are a few of the key challenges. I'm going to walk through 5 ways that, cross-border payments are changing and are undergoing kind of a systematic transformation and how that is becoming easier for corporates. So like I mentioned, digitization really has simplified the way that we as consumers and in our roles carry out our day-to-day tasks, right? So whether that's things like joining a gym or hailing a taxi, ordering a pizza, those kind of things, it's very easy for us to do this at our fingertips. And this has really opened up a new level of convenience, you might say, in the consumer world. Now, the corporate world is also benefiting, according to a number of the institutions that you've heard speaking today, from this kind of shift. Like I mentioned before, you can track a parcel from a merchant halfway around the world all the way to your front door. Well, why can't you track a multi-million-dollar payment to your supplier? Well, now you can, right? The banking community has evolved to meet the requirements of doing business in, this modern world. New technology, new standards, new business rules, and all in a new payment experience. So right now we're going to look at that payment experience and how, things are improving for the corporates. First and foremost, as touched on, initially, payments are now really easily traced if there's a problem. It's really easy to move money domestically, or fairly straightforward to move money domestically. Funds get cleared and are settled in basically real time nowadays, which means that you as corporates get instant access to incoming payments and can manage liquidity and cash forecasting and all of that fun stuff. Cross-border payments, not so much, but is becoming more fast and more of a seamless experience. There are of course, some complexities which cause bottlenecks, such as, money moving through different regulatory jurisdictions, having to be converted from and to different currencies, and basically be received, as timely as possible based around bank opening hours or cutoff times and all of those kind of things. This all in results in payments being delayed for, any number of reasons, which is why end-to-end tracking is so key. Like I mentioned, you can track a parcel, now you can track a payment, and again, Swift GPI is, the facility that's enabling this. Payments now come with the full transparency on fees. We'll all be familiar, or many of us will be familiar, you pay a supplier, and then you find out that they've actually received less than you sent. Or you've been paid, and then you've had to try and chase up a deficit or reconcile that payment with an invoice, and they don't necessarily match. Again, these things cause bottlenecks and can ultimately damage business relationships, increase costs, and all of those bad things within the world of payments. Well, that's why full transparency on fees and FX rates is what keeps, let's say, the wheels of trade in motion, right? Within cross-border payments now, you can have full visibility over the bank fees and the FX rates, again, through the usage of Swift GPI. Payments now arrive with data and remittance information unaltered. This is the key when we were building our corporates product, because as I mentioned before, if you send a payment out with a given piece of remittance information in there, which may be an invoice number, and the supplier receives that or you receive that from your supplier, if you cannot reconcile this with one of your automated tools, this can sit in a queue. It adds a layer of complexity to your back office administration. If data gets truncated or amended, it just causes problems when the recipient gets the payment message. Swift GPI is ensuring that there is no chance at all of the remittance information to be altered within the payment message. It's basically no longer a problem. You never see financial institutions amending the remittance information because Swift GPI has stamped that out. Payments can now be recalled if you suspect an error or a potential fraud. So, mistakes happen. If you're dealing with, me sending money to my mum, that's maybe 50 quid, right? Not a huge problem. If you're dealing with sending multi-million dollars to your supplier, if a mistake happens, it's absolutely imperative to act quickly to minimize that damage. Now, yeah, if you send an email, you can retract it, right? If you send a payment, you should be able to do the same and recall it, before it's too late. If you think, for example, there's been some suspected fraud, money may have been stolen, you need to act as quickly as possible to try and recover your funds, because it really may be the difference of 5 minutes between whether you recover the funds or not. Now, using Swift GPI, banks can intercept that payment on your behalf using a service within Swift GPI called Stop and Recall. Regardless of where it is in the payment chain, the payment first and foremost gets stopped from being passed over the chain, through the chain to any of the other intermediaries or to the beneficiary. And then a recall is kind of administered, and we will request that you have the payment returned to yourselves. You, as corporates, can use a third party such as Kyriba to initiate, ultimately, hopefully anyway, be able to initiate that kind of stop and recall. You can go to your financial institutions and say, please can you recall this payment? It's becoming extremely, extremely easy to do that. And finally, payments now come with a final confirmation. So we at Swift, and it's not only part of GPI, but a wider Swift mandated program, are requiring that by the end of 2020, all of the MT103 payments received by a beneficiary are either confirmed or confirmed that the payment has been rejected, meaning that you have absolute transparency on whether that payment has been credited to the account of the beneficiary that you're attempting to pay or not. So ultimately improving those kind of business relationships that could otherwise be damaged by calling up someone and saying, have you had that money? Have you not? My bank says they sent it. Why have you not got it? So we get an absolute irrevocable confirmation now, or will do as of the end of 2020. Just as a side note, that's already a program that's been running within Swift GPI for the last sort of 3 years. 65% of cross-border payments use GPI, so are already covered by this mandate. But we're rolling it out to the wider MT103 universe and hoping to cover, upwards of 95% from end of 2020. Everything I've just talked about looks into the use cases of Swift GPI. Swift GPI was as a product or a service that was brought about for the financial institutions first and foremost. Well, we now have Swift GPI for corporates, which allows the corporate institutions to piggyback off the added transparency, traceability, speed, unaltered remittance data that the financial institutions have. What's really great about Swift GPI is it provides this service level agreement between the corporate and the bank, provides a level of standardization between the way that the bank must communicate certain pieces of information to the corporate, and it also enables a multi-bank experience within an ERP or a TMS such as Kyriba. So this means that when Swift GPI for corporates is integrated into one of these ERPs or TMSs, again, such as Kyriba, you are able to see all of your banking counterparts in one place, all of the payables, soon to be all of the receivables. Now that's in the Swift GPI for corporates roadmap for in the next couple of months to be released, inbound tracking as we call it, within one place. You have the common rule book, you get all the statuses, all the transparency, all the notifications through the ERP or the TMS. Again, if that's not a place where you're at, this can also be done bilaterally with your financial institutions as well. As a corporate, what do you get when you sign up for GPI for corporates? Well, you get standardization, quality assurance, and future-proofing, right? Buzzwords, aren't they? Basically, we're telling you every time you get communicated to by a financial institution or a third party on the behalf of a financial institution, those messages or that communication will be in a standardized format, meaning that you can always be predictive of what you're going to receive and can process that in the correct manner. The quality assurance of the SLA, us holding our financial institutions on the SWIFT network to a really, really high standard, 24-hour confirmation of credit, straight-through processing for GPI payments, unaltered remittance information, providing full transparency on fees and FX. These are just a few that I can name that mean that you are going to be sure that you're receiving top quality information. And then future-proofing. An institution that signs up for GPI or GPI for corporates is signed up for GPI or GPI for corporates from here on out. Any of the developments within that product set will be rolled out to you. For example, if you were a corporate on Pay and Trace or initial GPI for corporates offering, you'll soon be on inbound tracking when it goes live, and there's no burden on yourselves. This will all be kind of rolled out to you by Swift and by the third parties that you work with. I've really flown through that. There's a couple more things I'm going to mention that don't explicitly talk about GPI for corporates. As mentioned by the other panel members, if you have questions and we don't get to them just now, you'll be able to find my details, or we'll ensure that you get my details or Lewis's details. Please feel free to reach out if you want anything clarified or want to talk further on any of these subjects. Now, for the final minute, the language of payments is changing, right? Many of you will have heard about the switch from the MT language on FIN to ISO 20022, this new, richer, fuller data format for payment messaging. Now, global and domestic payment schemes are converging into this one standard. We want ultra interoperability, that should really be. High data quality. MT messages are great. ISO messages are better. So what we're doing is we're kind of moving along with the community, which includes a lot of the payment market infrastructures like your Target 2s, like the Fed and CHIPS, like CHAPS, moving to ISO 20022 to ensure that when you pay someone cross-border, there's going to be an ISO 20022 message from 2022. You'll also be able to use that same payment message language for your domestic on CHAPS or for your domestic and the Fed and all these other schemes. ISO has been adopted across the globe already. We've seen it in over 80, well, we will see it in over 80% of high-value payment systems over the next 5 years. Instant payment systems such as TIPS already use it. It allows for richer data, quicker end-to-end processing, because you can ensure that within that richer data and the better granularity that you get, the payments will be accepted and processed much more quickly without having to stop within the chain, because people will be able to figure out that the Cuba Sports Bar is a bar in Miami, not in Cuba, and it thus won't hit any sanctions list. Get it right the first time based on that same example, and structured and meaningful data, meaning that, yeah, we have an address field, and within there you can break out the address to the name of the house, the street name, the postcode. Being able to physically read a payment message, so if there are reasons that you need to look at the base message, you can do that. Rather than, and let's be honest, Swift are the first to admit, if you pick up an MT103 and you've never seen one before, there's no way you know what the fields are in an MT103. ISO changes that. ISO makes this, the data processing quicker, better, and more reliable. That's everything that I wanted to talk about. As I said, please get in touch if you have any questions or want to talk about anything further. And I believe back to you, Lewis, because you're going to, maybe we've got a couple minutes for a bit of open Q&A.
Brilliant. Thanks, Ben. Thanks for flying through that. That was great. Very, very insightful. And thank you, everyone who has spoken this afternoon. So Elliot, Paul, James, Ben, that's been really insightful. I think as part of a follow-up, details will be sent around for contacts. So if anyone on the WebEx would like to reach out to one of the presenters, you can do so. Now, I appreciate we are sort of at the end of time for today's session, but what I propose is that the speakers, myself, Ben included, will remain on the WebEx for 15 minutes. So if anyone does have questions, please feel free to post those in the bottom right-hand corner in the Q&A section. And we will do our best to sort of send those out and answer them. So there are a couple of questions already there to get us started. So James, I think the first question there is for you. So James, can you see that question there that we have assigned to you?
Can you just say which? I think so. Can you say which one it is, and I'll attempt to answer.
Yeah, so the question, and maybe I can read out the question just so that everyone's aware of what we're stating, and that might be the best way to do it. So, question for James. So, thanks. Could you please explain what are the challenges MasterCard faces in industry-driven markets?
Well, that's a very good question. So, I guess the obvious point is when something's not regulatory-driven, the urgency for the banks to adopt the new API standards and make this open is obviously less. So the demand for the end user and by third parties wanting to launch these services is then the critical pressure that is put on the banks. And I guess the banks then have to try and find a way to monetize and get benefit themselves. So I guess it does make, so that's probably the key difference between something being industry-driven versus regulatory-driven. I think that what I would add is I always kind of say probably whether it's industry or regulatory, there's three key challenges with open banking, or the key three things you have to get right. So the first thing you've got to get right is having robust API, secure API developed, because if people in the ecosystem don't have confidence in the APIs that are being developed and they don't work as they should, the system won't be used. The second one would be having strong, robust use cases that basically people will want to use. So changing a habit of how they do something today to something new to leverage open banking, that use case and proposition needs to be strong. And then the final one, again, I'm saying it again, as I did on my presentation, but end user experience. If there is friction in the experience, especially when it comes to a payment, and it's more difficult to make that payment than it is today using a card or another payment mechanism, people won't use it. So, and I would say they are generic things that you need to get right in open banking.
Brilliant. Thanks, James. So there is another question here. So can RTP, request to pay, be used on companies' current payment rails? So say a council, capita, corporate, etc. Okay. So I don't know who wants to take that one. James, I possibly yourself again, or
I'm happy to take it. It's a very easy thing to answer. So the request to pay service is a secure messaging service. It's basically allowing communication between the biller and the payer. How then their payer decides to make that payment is totally up to them and is irrelevant to the request to pay service. So it sits above that layer. It's not instead of or an alternative payment layer. So yeah, of course, if you've got existing relationships with payment processors, they remain, and they may well provide the service themselves, but that will remain, and it's just a messaging.
Brilliant. Thanks, James. So, Paul, got a question here for you. So, do Kyriba support payments outside of TMS?
Yes, that's a good question. And yeah, we actually can be a standalone payment hub, or we can be an integrated part, as you've heard, with other partners, ERP solutions, and our own treasury management. So we can do payments going, for example, accounts payable, treasury expenses, and payroll. And we can also support payments coming in, collections such as direct debits. We're not just doing payments for treasury management.
Okay, brilliant.
Hope that helps.
Yeah, that's great. Thank you, Paul. So, Ben, I've got a question here for you on GPI. So I think there are a few slides that it says here. On one of the slides we mentioned pre-validation and APIs. Could you expand on what Swift's plans are for that?
Yeah, of course. So pre-validation is basically a bank-to-bank API that we are in the process of rolling out as a kind of beta at the moment, or a pilot at the moment, to basically help with things like beneficiary account verification. Other kind of items in the pipeline are, fee verification or fee prediction, etc. Very similar to the confirmation of payee scheme in the UK, but rolling that kind of premise out across cross-border payments. And then on the API side, yes, so explicitly within the corporates, APIs are basically, we are standardizing a corporate-to-bank API to help enable the information to be passed on into the corporate kind of infrastructure in a standardized way across all the financial institutions that they work with. We're very understanding that right now different FIs have a different approach to passing on that information, and we're very keen as part of the GPI for Corporates program to enable APIs in one standardized format. Now, that's the APIs piece on corporates and pre-val. Lewis, maybe you want to mention some more about APIs on Swift, but I mean, if explicitly GPI, yeah, that's the kind of stuff we're working on.
Yeah, I suppose we're just waiting for a few more questions to come through, but just on API, so Swift has a pretty large and robust strategy around APIs. For anyone who knows Swift, obviously we've worked very closely in the standard space, so we are looking at harmonization of global API standards. So that's one of the areas that we're looking to work on, and harmonizing across groups such as Berlin Group, STET, Open Banking Implementation Entity in the UK. Outside of that, we're obviously looking at making all Swift services available via APIs, which will lead into some of our sort of future strategy as we move through the next couple of years. But I think that's probably another hour and a half of sessions on APIs in itself. So there's another question here. So why is faster payments of interest to corporates? So I don't know, Paul, James, Elliot, maybe one of you guys could take that one.
This is Paul here. I'm quite happy to take that. Yeah, so
Great,
what we're finding in the industry is that more and more corporates are now looking or at moving to faster payments for doing their accounts payable, etc. transactions. And if you forgive the pun, but it's fast becoming the norm, and the reason for that is because it allows last-minute payments, literally within a few minutes, so they're able to negotiate funds to pay off invoices quicker, in return potentially for a discount. They're able to hold on funds till they actually make that transaction as well, whereas with other payment schemes, those funds can be in transition, I should say, for several days. So by making faster payments, instant payments means those funds go simultaneously from one bank account to the supplier, for example. I hope that answers the question.
Yeah, thanks. Thanks, Paul. So bear with me. Another question here. So, Ben, this one's actually for you. So will the SWIFT strategy for API, well, actually, maybe this is a question for both of us. Will the SWIFT strategy for API standardization include ISO 20022? So I'm happy to say that one, Ben. So yes, right. In essence. So the API strategy and standardization that we have will use the ISO 20022 data dictionary. So we see, ISO 20022 as the language or the language used to build the API content. So we will be building, based on ISO 20022, JSON as the API standard, and integrating systems like Swagger Hub in order to expose those to the community. So yes, in short, for that question. So we've got a question here as well. So trade and payments digitization are key projects for India. Is it visible at a global level? So maybe that's a bit more of a broader question. Maybe Elliot, I don't know if that's something you maybe want to tackle in terms of what you're seeing from a global level. Is the trade and payments digitization piece in India visible?
Well, I think the answer, it's a difficult one. It's a very good question. It's a difficult one to answer. I mean, at the end of the day, it's all about the ability to see and view activity. And the key areas that perhaps that would fall into would be in the supply chain environment, order to cash, in the supply chain area, where you have buyer and seller and they're coming together. The difficulty is that one particular entity may have that capability, digitalization, and have the ability to actually see and view his or her activity in real time. The challenge is if the other individual can physically see it. So the supply chain offers those capabilities. The challenge is that whether both the buyer and the seller are on the same, interoperability and can see that activity in real time, both of them. And that is an issue. I'm not personally familiar with the India concept, but from the trade activity that I have personally been involved in, any bank that provides online capability to view letters of credit and to view the changes that often come about when letters of credit are opened by the initiating party and then advised by the beneficiary bank often causes issues. And so the fact that individuals can view and see that activity online in a digitalized format rather than paper-based is clearly an advantage.
Great. Brilliant. Thank you, Elliot. So there's another question here. So so I think this is the way to answer this question. So is this Kyriba India ready for data at rest as per India laws? So Paul, I don't know if that one's directed at yourself there. I'm not sure if that makes sense.
Could you repeat that question, please?
So, I'm going to read it out exactly as it's written. So, is this Kyriba India ready for data at rest as per India laws?
Right, I would have to come back to the attendee on that one.
Okay.
I'm going to say yes, but I need to double check just to make sure. But normally, whichever country we're in, then we always conform to the regulations and compliance and law. So I'll come back privately.
Brilliant.
If that's okay.
That's great. Thanks, Paul. Okay, so there's a question here. So if a customer goes with Kyriba, do they have to sign contracts with, for example, Swift as well?
So shall I answer that one, Lewis?
Yeah, go for it, Paul. Yeah, please.
Yeah. Okay. So what we do is, as Kyriba, if a customer goes ahead with ourselves, and they want, I don't know, let's say BACS, faster payment, direct debit, Swift capability, then we provide all that with inside Kyriba and our payment hub. So they're only signing one contract. They only have support with ourselves, with one organisation. I think that backs what you were saying actually earlier about how we work together. So they don't have to sign up with Swift as well. They do it all by signing the Kyriba contract and get access to all those different payment capabilities.
Exactly. Yeah, I concur. Okay. So it's gone a little bit quiet on the question front. So let's give it another minute or so for any more questions to come in. We'll see if there's any more. Okay, so Paul, maybe a clarification here on the question around data in India. So in India, there are specific laws where copies of data need to be maintained. Or is that possible through Kyriba to have data copied and maintained?
Yes, we've got an answer actually from one of my colleagues, and yes, it's possible with the Kyriba platform is the answer. So I'm pleased to say that. I just wanted clarification.
Okay. Yeah, and there's another question here. So yes, it is possible to get a copy of the webinar and the slides, definitely. Okay. So question here to all of the panelists. So what are the biggest opportunities? It's quite a broad question. So maybe this is quite a nice one to potentially end on here. So maybe we could go through and have a sort of a quick 30-second answer from each of the panelists on what we think are the biggest opportunities in payments over the next maybe 6 to 12 months. So Elliot, can we start with you?
Yeah, sure. Well, I see one particular development, and I don't know if it's 30 seconds, but very briefly. Given the whole interoperability of the payments world, I was at a conference recently, and in a particular country, it was the Netherlands, you have a situation where a water company that maybe has 30,000 utility buys, if you like, in the water houses or whatever you call them. You have a supermarket like a Tesco's, for example, only as an example. They're already providing banking services. They do credit cards. They do insurance. So, and they have their bank with a provider. And I see those sort of institutions teaming up, whereby, in the example of the Netherlands, is whereby you can use your bank card, or suddenly it's your utility company card, and because of the connection and interoperability between the large supermarket and the particular utility company, there's a tremendous database, is there not? You have all the people who are shop and buy whatever at the supermarket. There's tremendous database there. They know, the supermarket knows the holidays they buy and their insurance and the food. And the data is there. And that you maybe have the same institution linking up with a bank, maybe a bank with 6 million customers. Suddenly you have this cross-fertilization of services and offerings. And what I think is going to happen in the next 5 years, if not sooner, and from discussions I've had in the market and my colleagues, is the bank, the actual term bank, may just fall away. And you have a utility card, if you like, from your local water company, and because they've got relationships with a raft of different organizations, such as other banks and a supermarket or an entity providing a whole raft of different services, you can use your utility card to pay your bills, to make your payments, to buy your food, to even order your prescription for your elderly grandfather who perhaps needs some tablets. The whole cross-fertilization of the payments industry and entering and connecting with other industries, given the technology and what's happening, I believe is going to happen. A rather long answer to a short question, but tremendous sophistication and opportunities coming up from different industries as they connect. And that is actually happening. As I say, I was at a conference recently, and as long as the entities within the community can connect to the platform, everyone can offer their services across that platform. Not too dissimilar, dare I say, to what we're doing in the payments business. The centralized common platform. Thank you.
Thank you very much, Elliot. So James, same question to you. So what are the biggest opportunities, do you think, in the next 6 to 12 months for the payments industry?
So, I mean, MasterCard are very much focused and all about choice in payments. And I think if I reflect on where we are currently in this very strange times, I think the ability to support vulnerable people and people who potentially don't have access to payments, to financial services, I think one of the key drivers, and very almost as if I thought about it, open banking and request to pay are two such services that will really help people who maybe aren't typically using digital services or really taking full advantage of it. It'll potentially give them access if those use cases allow. So I think helping more people become more financially, more digital savvy and have greater access to financial services. And I think that's just it's becoming so much more relevant because of the circumstances we're in as well.
Great, thanks, James. And Paul, from your perspective.
Yes, I'll answer that. What we've found, especially in the last couple of months due to the coronavirus, is that corporates are really being challenged on top of, for example, moving ERP projects to the cloud, and now they've got to contend with business continuity planning. They also have to look at the fraud aspect, which is massively increased as well, and payments fraud as they're migrating. So there's actually 3 or 4 different strands which are all coming together, which they're trying to address on top of their normal day, if I can call it that. So that's what we're finding is how can you bring those 3 or 4 strands together and address them at the same time. So it is a very difficult, demanding time out there. As I've mentioned, it may be for a few months, it may be for a couple of years, it may come back again in times of crisis. No one knows, but we're finding corporates are trying to best protect themselves as they can. I hope that answers that one, because we also need to ask you as well, Lewis, the same question back to you.
Yeah, good. I will let Ben give his perspective on this one.
Thanks, Lewis. Thanks, Paul. I would actually have to say that partnerships between networks such as SWIFT and third parties or ERP, TMS providers such as Kyriba are the biggest opportunity in the next 6 to 12 months. As we, the network, develop the ability to have more transparency within the payments landscape, and institutions or organizations such as Kyriba develop the really cool front-end method for you to consume that information, that's got to be a huge opportunity to get ahead of your own competitors.
Thank you very much. I fully agree with that, as you would expect. Thank you.
Surprising.
Yeah.
Great. Well, look, I think with that, we will bring this webinar to a close. So again, I would just like to thank all of our speakers today. So Elliot, Paul, James, Ben, that's been really, really insightful, and I hope everyone on the webinar has found this useful. We will be sharing a copy of the webinar and the slides for attendees, as well as those who potentially didn't attend or couldn't make it this afternoon. And I think, it's been a real pleasure to speak to everyone this afternoon and present. I think we would certainly be looking to do more of these in the future, so please keep an eye out for anything that comes up. And once we are back in the office, once we are back into a working environment, we would hope to be able to do these in a face-to-face environment as well, and certainly do that ongoing. So look, with that, thank you very much. I hope everyone stays safe and well, enjoys the sunshine in the afternoon. Certainly if you're in the UK, it looks like it's going to be a very nice weekend. So please enjoy, please stay safe, and we look forward to speaking to you again next time.
And Lewis, can I just say a massive thank you to you for helping arrange this. It's been very difficult when you think we've got potentially 7 panellists all across the UK. So business continuity has worked well doing this remotely. Thank you.
That's a pleasure. It's been fun. So with that, thank you, everyone.
Thank you.
We'll close the call there. And, yeah, like we say, there'll be follow-ups coming out. And if you want to catch up with any of these speakers, details will be shared.
Thanks very much.
Thank you.
Thank you, everyone.
Bye-bye. Goodbye.